Good evening, and thank you for your time. If I can just apologize, I've got a bit of a tickle in the throat, so if I do cough or splutter or anything like that, apologies for that. Yeah, Roland Kandler, yes, I'm the National Underwriting Manager for Associated Marine, and my colleague and boss at the back there is Alex Downey as well, so at a later stage, yeah, please feel free to introduce yourself to us. Yeah, this is really just a very quick run through on what we do, what is marine insurance in a brief moment. But yes, I'm happy to take your questions at a later stage. If I can also at the outset say that we, our business, whilst we're happy to take business indirect, our preferred way of doing business is through an insurance broker. I don't know if there are any insurance brokers here present here, but we have agencies with any number of the major corporate insurance brokers and the small SME brokers. So yes, feel free if there are any business needs to channel that through your insurance broker. Right. Yeah, I've had a partnership in Africa. We are a South African insurer, but our footprint extends way beyond our borders, particularly into East Africa, into Nigeria, into Central Africa. We write business in the DRC, Malawi, Zambia, and of course into the Far East as well. Yeah, we're a wholly owned subsidiary of Santam Insurance Company. We are the largest direct insurer in South Africa, and we are represented in the official bodies in our market. Yeah, what is marine insurance? It's firstly, and the biggest part of our book is the insurance of cargo, then the insurance of vessels from pleasure craft right through to big fishing vessels, and then the insurance of marine liabilities. Just a little bit of background to marine insurance. It is the oldest form of insurance. It involves insurance of cargo being moved from one point to the other, but also the insurance of local transits. It includes the storage of goods, and we tend to, in most ways, insure the actual owner of the cargo. So it's subject to terms of sale. It's subject to ownership as a somebody who does move cargo about. Marine cargo involves the import, export, cross voyages and shipment of goods worldwide by any mode of transport. We can also provide cover for advanced loss of profits, often also called delay in startup, where an importer, particularly talking about project cargo, would face penalties and other financial implications because of a delay in a project or loss of key equipment. Of course, then we have a hybrid of all cargo and static risks that come together as a stock throughput policy that will cover the whole logistical operation of an importer and somebody who distributes, and typically for fast-moving consumer goods, electronic goods, where there's minimal local manufacturing. More specifically, goods in transit, that is local transit of goods. It does include cross-border transits specific to cargo owners, but we also embrace the conditions put on us by the Financial Services Board as far as insuring of third-party goods, where we might insure a carrier or haulier, and we tailor-make products to take care of that, where you can't necessarily effect a policy in the name of a third party. Then there's hull insurance, ranging really from the insurance of commercial fishing vessels through to working vessels around the port and the coast of South Africa, high-valued yachts and pleasure craft. And where, because of the values involved, it doesn't extend to your larger shipping liners and that sort of thing. The values are far in excess of what we can hold locally. Then, of course, there's marine liabilities, and as you can see, there's a host of liability risks that we do insure. All of them are related in some or other way to either a marine adventure or somebody who does work associated with the sea. Reason being is most commercial insurers can't insure something that is related to anything that basically leaves dry land. So we have a host of things there. At times we may just insure the legal defence costs involved in that, right through to the full liability of somebody who operates in that area. Marine is by its nature international. Firstly, the way we conduct our business, we maintain very close relationships with international insurance markets, more particularly Lloyd's of London, where the bulk of the expertise lie, through to professional reinsurers. But then, of course, we embrace the international aspect of marine insurance. So it's important for us to understand international trade. It's important for us to understand things like Incoterms, and all the various acts and laws that govern shipping. The only limiting factor is our own local legislation, and of course that's north of our borders, and of course where the United Nations might not allow us to insure because of punitive sanctions. Not only do we have the strength of the Santam Group, but we also have the ability to put down A-rated paper north of our borders through an association that we have with the Munich Re Group. Right, sort of now going to really more dwell on marine cargo this evening, so it's on purpose that I've put a map of East Africa, because I believe that a lot of what we do in South Africa now does affect how we interact with beyond our border, and of course I think that's really what we hear about. So yeah, imports involves anything that would come into a country from an overseas destination. Now it can either be by sea freight coming in to an inland destination where we would insure the entire aspect of it. It could well be to a port, and of course it could be from one country to the other. All of those we would consider and insure as an import. Export, of course, is the opposite, leaving from a inland position to an overseas destination anywhere in the world. Likewise, should an exporter choose to export from a port, we can cope with that, and of course an export from one country to the other as much. Yeah. In a transit within a country, of course we're prohibited from insuring that locally in any other territory, but using our network that we have, we can facilitate that either on a global kind of arrangement or using the local operations to ensure that. So of course from our point of view, from a Santam point of view, South Africa would certainly feature a lot more in that. Then of course we can also facilitate a cross voyage which may involve a local entity that does involve his business in other countries. So, you know, the goods may well be sourced from a Far Eastern destination to a destination in North Africa. If the company doing that transaction exists locally as a South African business, we can certainly take care of the insurance of that kind of transit as well. Yeah, why would you insure cargo? Often we are found where we are met with a catastrophe, a vessel on fire, a vessel in trouble or something like that, and it's staggering to find out how much of that cargo is uninsured. And as I'll explain a little later, even the most basic of cover can sort out many of those eventualities. But yes, certain things happen. Containers do get delivered upside down. Vessels do catch fire. Strangely enough, the amusing story behind that is that vessel actually made it safely into port, notwithstanding the condition that it was in. So whilst a lot of cargo was lost, a lot of it was also saved. We deal with vehicles on fire. A lot of it is maintenance issues. In the case of this one, the brakes burnt out. I don't know if it's this one, but we've heard stories of arriving there and basically we found mechanics hurriedly having to actually replace the wooden planks that were stuck in place of brake shoes with proper brake pads before our surveyor found out what had happened. Yeah, ships do collide. I'm afraid to say that I had a personal involvement in this casualty. I insured all of the cargo. on that poor little boat, and it was a total loss. It was a whole lot of timber. Yeah, and this didn't happen down the ocean. This happened in Singapore Harbour as well, where you would think that you have all sorts of sophisticated monitoring equipment that can prevent these kind of things, and yeah, they do indeed happen. Again, to just illustrate how assumptions that you have. This vessel, I think at the time she got into trouble, was about 5 years old. A modern cargo carrier from a very well-known shipping line. Maul is, I think, the third or fourth biggest shipping line in the world, and broke up. No incident happened, just the ship broke up and sunk, I think, within about 10 minutes. They put out the call, and yeah, that's what eventually remained of that ship. Complete loss of cargo. I don't think loss of life, thankfully, but yeah, loss of the vessel. Incidentally, they pulled all of those boats in, and they actually found there to be problems in the structural integrity of those ships, and hopefully by doing so averted 2, 3, 4 further casualties. Of course, then probably our biggest worry to us is hijack and theft of varying degrees. Some of it very skillful, some of it brutally at the end of a knife or it's at the end of a gun. Right, just yeah, marine insurance is probably one of the oldest professions. We all know what the oldest profession is, but has a very, very long history. Started in Lloyd's Coffee Shop of London, formalised, strangely enough, many, many, many years after that, in 1906, when the Marine Insurance Act was drafted, and was, I think it was the combination of probably about 100 years of case law in marine insurance. It is still the reference that we go to, although it has been updated, and it was updated in 2015. But that was only really to bring it in line with current shipping trends and that sort of thing. The essence of the Act is still the 1906 Act. It is English law, so our policies are subject to both South African law and English law in the interpretation. Yeah, why would you insure? Firstly, there's the risk of physical loss of damage or to cargo. Then there's the strange thing called general average. Time does not permit, but effectively it's costs that you would have to pay to the owner of the vessel should that ship be in trouble, and should there be costs incurred to save that ship. And even should your cargo that you ship on board not be damaged, you will, and sometimes to substantial value, have to lodge guarantees to actually have your cargo released. Incidentally, again, the most basic of marine coverage would actually insure you against that. Risk transfer really refers to getting that exposure off your balance sheet, to take the ebbs and flows out of your business where you are at risk in international trade. And then, of course, it's the liability that both you have and that transporters, carriers, forwarders, all of that would have to you as a business. Right, yeah, just to sort of graphically, I think, put a lot of what I've been talking about together. What really buttons everything together are the terms of sale. Your ownership of the cargo would determine how you insure it, and your ability to insure it. A concept of marine insurance is that you must have insurance at the time of loss, not as inception, like most non-marine policies are. You would have to have an insurable interest in what you're insuring at the time that you insure it. Of course, like any insurance policy, we've got conditions, and what we do with those conditions and how we price it all determines on our risk appetite. Then, of course, these are the pillars really of a marine policy. Again, there's the terms of sale that determine your ownership, restrictive requirements that might be product specific, destination specific, history specific, clauses are, I'll tell you more about it, but they're the internationally recognized clauses that form the basis of cover. Local requirements determining on how we may or may not insure your goods, and of course the conditions that put all of this together. I've just put the little man up there, warehouse to warehouse, because it's a term that often comes from particularly your bankers. If you're involved in international shipping, bankers always want to know that it's insured by warehouse to warehouse, which is often a misnomer. The terms of sale actually determine our ability to insure the goods. I am just rushing through this, so as you know, if you want to ask any questions, typically a marine insurance starts at the time goods leave a warehouse anywhere in the world, both locally and internationally. It carries during the ordinary course of transit. That includes all of these eventualities, be it on a truck, a train, a warehouse, a ship, and of course that could easily be an aeroplane or a train, and I've done it again. And then of course it would end on delivery to a warehouse, either for allocation or distribution, or storage that you elect to use, or 60 days after coming off the means of conveyance, either the ship or the aeroplane or something like that. Right, I think it is worth, I think perhaps some here are very familiar with international trade and particularly Incoterms. Those that are not, this really is what determines ownership of whatever we are insuring. They're an international set of rules that govern how you sell goods, buy goods, pay for the goods, and indeed insure the goods. Just put that up just for some amusement, how things do happen, what we have to deal with, and sometimes our cargo actually gets to its destination in a better state there than through our sophisticated port network. Yeah, just a little bit about how we insure cargo. We deal with the international set of marine insurance clauses determined by the group of London underwriters. It used to be the Institute of London Underwriters. It's now a body that is formed by both in London underwriters and Lloyd's underwriters, and essentially broken down into A, B, and C clauses. One, the A being the widest of cover, C being the least cover. In essence, they can be described as building blocks. That would be your most basic of cover. And again, it's worth just highlighting aspects like general average, like jettison, all things which are beyond your control as somebody shipping cargo, but nonetheless not insured, not dealt with, can mean significant financial loss to a business where you have no control. Your cargo clauses B build up on that, giving a little bit more cover, particularly an element of water damage, and the risk of losing your cargo aboard. And then of course all risks would include all sorts of other things that you would be exposed to. As a matter of course, we include war cover and rights and strike cover. On any other insurance you would have to buy SASRIA, we tend to include it automatically, mainly because you again can't manage those exposures dealing in an international environment. Okay, typically your cargo clauses B would be for on deck, unprotected, second-hand goods, tail-end goods. Your A clauses, your all risks cover for stuff that's properly protected and shipped. Then of course we do provide specific cover for certain covers, some wider than the others, some very specific to the commodities. For example, like coal would quite unusually actually insure spontaneous combustion, and it's quite an extensive list. Then of course, dealing in Africa, we walk quite a heavy legislative tightrope. Particularly in East Africa, there's there's the local body is basically dictating that all goods leaving or going into the country must be locally insured. It fires in the face of what we understand as far as ownership and the ability to insure, but nonetheless they have to do it. And I think that we, locally we certainly have that, not to the same extent. But particularly, I think, as I mentioned earlier on, a haulier operating years ago could quite legitimately insure the cargo that he carries. Now it's a much bigger issue from him from a legal point of view, and what our regulator allows him to do. What interests us, particularly in assessing a risk, is the type of packing, and that can be from tanks through to boxes and bags and all sorts of things. The method that the goods are shipped, from the ship's hold right through to containers and specific isotainers, values that's involved, both in limits, in insured values, in turnovers and revenue, that sort of thing. And then, of course, what the history of the policy looks like, how many claims they've had, what have been averted by risk protection, what has been subsidised by means of your own risk retention, those sort of things. That is it. Thank you very much.